Okay, let's just dive right in. The crypto market is, well, it's a sea of red right now, and you can feel the fear out there. Now look, this explainer isn't about giving you advice or telling you what to do with your money. Not at all. The goal here is just to give you some information, some real perspective, so we can try to understand what is actually going on behind the scenes.
So you're looking at your portfolio and man, it feels like the floor just dropped out from under you. It is a really tough feeling, and it brings up that one huge question. Why? Why is this happening? Let's walk through the big forces at play here, because what's going on is a whole lot more complex than just a simple price dip.
All right, so the first major reason we're seeing all this pressure on crypto, well, it's actually coming from a very, very old place. For the first time in what feels like forever, precious metals are back in a huge way. They're performing so strongly that they're not just competing with crypto anymore. In a lot of cases, they're actually outperforming it.
Now, what's so fascinating here is the trigger. It all goes back to 2022. When the US froze hundreds of billions in Russian assets, it sent this massive shockwave through the entire global financial system. You had central banks all over the world, especially places like China, looking at their own holdings of US dollars and thinking, wait a minute, could that happen to us? And that thought sparked this historic global rush into gold, a neutral, safe asset that they could actually control.
And this chart, wow, it just shows you the sheer scale of that shift. Before 2022, central banks were buying, a pretty steady 450 tons of gold a year. After that trigger event, boom, they started buying over 1,000 tons a year. We're talking about a massive, fundamental surge in demand, and it's being driven by the biggest players on the planet. So, here's the bottom line. When an asset class like gold is suddenly seen as not only safer, but is also giving you these crypto-like returns, well, it just sucks all the air out of the room. A huge amount of capital, and just as important, the market's attention that probably would have flowed into Bitcoin is now chasing gold and silver instead. Okay, so let's move on to the second big factor here, and this one's a little more out there. It's more technical, it's forward-looking. We're talking about the looming shadow of quantum computing. Now, this isn't a problem that exists today, but the fear of what it could do down the road is absolutely having an impact on prices right now.
So what even is it? Well, to put it simply, quantum computers are this theoretical next generation of supercomputers. They're so unbelievably powerful that they could one day break the very encryption that keeps everything safe online, from your bank account to, you guessed it, your crypto.
So you might be asking, okay, but why is this such a specific threat for Bitcoin? Well, it's because of this number. A staggering 20 to 25% of all Bitcoin is thought to be lost forever. We're talking about Satoshi's original stash of 1 million coins, plus all the Bitcoin from people who lost their hard drives or forgot their keys over the years.
And here's the story that's spooking the market. The fear is that a quantum computer could one day be powerful enough to basically reverse engineer the private keys for all of those dormant lost wallets. A hacker could suddenly unlock millions of these lost coins and just dump them onto the open market. That kind of supply shock, well, it could completely crash the price. It's a future threat, for sure, but it's creating fear today.
Okay, so we've talked about the bears. Gold is pulling money away. Quantum computing is this scary future threat. It sounds pretty grim, I know. But now I want us to pivot. Let's put all this panic into a much, much bigger historical picture.
Just take a look at this. Amazon, it crashed 95% during the dot-com bust. 95%. Meta dropped 76% just a couple of years ago. Nvidia, the darling of AI right now, fell 66%. And Microsoft, people called it dead money for more than a decade. Every single one of these giants, they all had moments where the market basically left them for dead.
So what was their secret? How did they survive that and become the titans they are today? They tuned out the noise. They ignored their collapsing stock prices and just stayed absolutely laser-focused on building their product, on delivering on their core mission. The real value was in what they were building, not in the day-to-day chaos of the market.
And this idea right here, this brings us to what I think is the single most important takeaway from this whole explainer. If you really want to understand what's happening with Bitcoin, you have got to learn how to separate two totally different things, the price and the protocol.
So the price, that's what you see on the charts every day. It's messy, it's emotional, it's driven by news cycles and fear and greed. But the protocol, that's the technology itself. It's the code, the actual rules of the network.
You see, one is just chaotic noise, the other is the steady underlying signal.
And that is the crucial thing to remember. No matter what the price is doing, the Bitcoin protocol is just working. It's doing exactly what it was designed to do. The network has never, ever been hacked. The hard cap of 21 million coins? That hasn't changed. That global, decentralized network of miners and nodes? It's still running, processing blocks about every 10 minutes, day in and day out. The technology is fine.
So I guess I'll just leave you with this one question. When you look at the market right now, it is so easy to see the short-term horror movie that's playing out on the price charts. But if you zoom out, if you look at the underlying technology, its history, its consistency, you might start to see a very different long-term story unfolding. So the question is, which movie are you choosing to watch?